Hello and welcome to Macro Mondays presented by the Gokhstein News Network. I'm your host, Landy. Today is August 25th, 2025, and we're looking at Bitcoin here on the daily. We did get a bearish retest of the actual range lows, and that rejection has led to a sell-off into a major weekly level. We're going to discuss that for Bitcoin. And ETH did exactly what I was talking about, and that is make a slightly new higher high, just shy of $5,000. And it did not close above its previous all-time high, leading also to a sell-off along with Bitcoin. So we're going to take a look at both of those and kind of concentrate on some of the areas of interest for both. And maybe midweek we'll check on, Solana, SUI, and a couple of others. Now, one of the bigger things that I did want to point out, and I don't often bring this up, but the Monday Treasury auctions are still, going kind of off of what Powell spoke about and his indecisive kind of mealy-mouthed way of throwing the market a bone on a Friday into a lower liquidity environment. Still pricing in about a 25 basis point cut. That was revealed kind of in the way that the auction went for the 13 and 26-week treasuries this morning as well. So one of the bigger things that I'm going to caution people about is if he didn't say that he was going to cut. He left the door open to possibly cut, but also possibly hold. And the economic data that's coming in over the next couple of weeks coming into September is going to be very, very important to kind of gauge whether or not he's going to cut in September. Now, I still think that he's going to cut sometime this year. If it's not in September, then like I've been saying, I would expect a cut possibly in Q4. And it is still going to depend on all of the underlying economic data. So he doesn't really have a lot of incentive to right now. I think maybe the market's waking up to that, especially after some exuberance on Friday. But let's go ahead and jump into what's going on with Bitcoin here. We are getting expansion to the downside here. We did see a close below the lower second. And after a nice swing into some of the daily levels, in fact, hitting this high directly on the Sunday candle. I know that a lot was being made of a fairly big whale move in the market that sold off some Bitcoin to hit this daily level inside of the wider weekly level. Now we're at the lower end of that daily level. In fact, we saw a little bit of a swing below into some of where the weekly is right around 109. But we did see it close. No, we saw it close right inside of this high here, but now pushing that high again in the lower term timeframes of the current session. Of course, it is Monday, but the Tuesday candle is open. Let's go ahead and take a look at some of the levels here. Now, this is one of the reasons why I did call out this daily level inside of the weekly level. The weekly level is pointed out here in the white horizontals. And this is 112 to 109 essentially. And then we have the top side structure of the prior consolidation. And this was, essentially 109,630 here, which is being tested right now, to the swing high here at right around 110,830. And we did see that initial candle come down and just tag this high right here at about 110,650. And if this area is dropped, I would expect 109 to get tagged. If this is dropped, pay very close attention to the next big area where the move to a new all-time high or subsequently new all-time highs did originate from. And that's the 108 on a close to about 107,270. If that area does fail, there is a daily level just below. There is a, give me 1 second here. And not at my normal battle station here, so you'll have to forgive me. But the next bigger level is going to be right around 105, essentially. And this is a level that, if you've listened to myself on various Spaces events, I have been pointing out that is below the 108 level on a daily. That is an area of interest to pay very close attention to. Should we see 109 drop into that 107 to 108 low here, that's the next major area. Now, just below there is a fib level at the 1272. You see that this did hold support over here acted as a bit of an inflection point as well for price action on the daily. That's coming in around the mid 103 region, more close to that 103,650. And then there's the big weekly higher low level just below there at 101 to 98,225. This is a red zone because this would be kind of any price action below here, even on a swing, would be a trend break on a swing basis or a wick basis. But any closes below here would be a break of structure on the weekly. And that's where we would have to entertain possible lower highs in the weekly on any kind of move back up. Now, that's not a foregone conclusion, but that is something to be aware of. As we have not hit full trend. So let me go ahead and add this daily in here. So essentially, below the area that we're in at the 109 to 112 on the weekly, we have 107 to 108 to pay attention to on the daily. And then below there, it's essentially 105. Anywhere on closes below there, could we see a pit stop around the 103 level? 103.5 by the 1272? Sure. It's fair game for sure. But the real big level to pay attention to is the 101 to 98,227. But I want to show you the weekly structure right now. This is a weekly high confirmed and a move back to the basis band here. So we had our initial expansion to the downside kickoff, and then we saw a run right back to the top side of the bands here around the upper second. That's where we got our 112 call, which was one of the main areas I was looking for. And then we got our 123, and then subsequently slightly above there, we got essentially our 125 coming in at 124,500. So targets have all been hit to the upside, and mean reversion is the name of the game right now here back to the basis band, which is right around 108. So that is confluent with that daily level. Closes below there going to look ugly. I'm moving my cursor down here, but let's move the arrow down here to the weekly lower first standard deviation, which is right around 98 to 99,000. It's 98,900 to $99,000. Essentially, the next big area right around the weekly higher low structure. So, you can see 98,225 right there, just below the lower first standard deviation. Now, when moving from expansion into compression, on the way up, when you see the band switch into a compression mode, typically the upper bands will act as resistance in order, upper first, second, and third. And then we have the basis typically seen as an area of support. You want these to be confluent in and around areas that are historical support and resistance zones of interest. So basis band right there at that major daily level where the move initiated two new highs right around 108. Just below there, we have the lower first, and that is right in line with our last higher low here. Anywhere below there, then we start looking down substantially more to the lower second around 89. And that would be more of a crash scenario because the weekly bands will continue to compress if Bitcoin is hanging around the basis or anywhere between the upper first up here and the lower first down here. And it'll start to trend sideways and we'll get more of a range look. And in this case, that's kind of what the bulls would want, especially staying above like 101. That's what the bulls want to see. But in a crash scenario, just be aware that lower first, right around that weekly higher low, lower second, run another big area at $90,000, right around the low side of this structure here. There is an area of interest in here just below the 99 to kind of, that low right here. We have $95,000, which is the point of control of this range. You might remember that from, the rejection and then recovery and retest before making highs. And that was this area here. You can see that the $95,000 to $96,000 right here is a key area just below the lower first. You can see the lower second is in the bottom side of that original range, right around the 1.168 or 16.8% level, which was based on a log fib from the prior cycle. So yeah, I mean, this is nothing crazy, nothing to be screaming about. Just be aware that things could get pretty volatile if the current levels are dropped right here, because it is a major weekly, obviously being right in the thick of this weekly and then right in the we do have that weekly close open right around 104.5, right around that 105 region. Of course, that's around another daily level of interest that we were just looking at. And in fact, we can bring that back up real quick here, just so you can kind of see that based on the dailies, you can see that the daily area is just above this weekly close open here, and that's going to be another one that will be relevant. And this is a retest thus far. We'll see how the bulls do here and if they can hold up. Now let's check on a few things. Lower term time frames. Let's go down to. Let's go ahead and actually remove this, and then we'll go down to the daily again. We'll turn on support and resistance zones of interest here. I know I keep turning them on and off, but it's just so that I don't kill your eyeballs. But let's go ahead and take a look at the 12-hour here. So 12-hour is just kind of riding the lower second down here. See the lower third is right there in line at the bottom side of that daily level, which of course is the bottom side of a 12-hour level as well, right around that 107.270 to 108. And are we getting any signals to signal a counter trend? Nope, nothing yet. Let's go down to a lower term time frame, like a 4-hour. It's getting down there. Nothing showing signs of changing here anytime soon. And I'm going to break down the anatomy of this retest and why I was bearish on the retest in just a moment as well, because a lot of people are like, how did you know to go short? Or like, why were you already short? I was short as a hedge off of the highs up here, but I ended up holding it because of the structure inside of the zone up here, which paid off pretty well. I took profits here, and then I shorted again on the retest, which was bearish of this zone here. And that is one of the reasons why I've been bearish, because it was a bearish retest. And in this case, we're not seeing too much in terms of counter trend signals on the 4-hour. Closes back above 110.561 would start to turn momentum. Doesn't do too much. If we do see it turn like here, for instance, and stay above the 109 level and not drop it, there would be another drive of bullish divergence that might be good for a pop up. On the 12-hour, really nothing to be said on any closes below like 113, and that doesn't do much anyway. Need to recover 114.750 and start working our way back to 115.700 and reclaiming the bottom side of this zone up here. And this was bearish all the way down. We had a trend break, and then we had a higher low put in, right, followed by a retest of resistance into a lower high. Easy short. And even when we saw the higher high up here that broke this area, we needed to see close above 110 and start taking out like the 4-hour 118. I believe this was also the daily at the time. This is the daily lower high, right around 118.650 or something. Yeah, in fact, 118.641. Sorry, that was like the daily lower high, and anything below that is bearish, and was bearish. On the daily, the lower high, even on a trend break, if this bounces from here, for instance, in this zone, or dips down and throws a swing and then tries to climb back up, it needs to break the downtrend on closes above 117.416, and still, yet again, I'm going to be consistent with this. I need to see closes above around 117.8 to 118, and then get above that swing. And I'm still going to maintain shorts don't have too much cover above 120 to 121, and that's the area where things get interesting back to the upside. Now, that picture could change, but I can just tell you based on where I'm positioned, like it's going to be very tight. I wouldn't even think about getting out. I'm taking profits on the way down, but you'd have to push price all the way back up and start closing above 121. 118 would start to throw some alarm bells, but it's not until 120 to 121 on closes that I'd be like, okay, let's let this go and reposition. That's pretty much it for Bitcoin. There's not too much more to say. Things, you can start entertaining a move back to 113 on closes back above 112. Right, we see that the lower first is right there at 113. does not do too much. That still need to get above. Yeah, that would put price above this swing high fail that has led to the further digging into this area of liquidity. And, still not much to be had below that zone up there, 115.7 to essentially 118. Otherwise, it's kind of down and to the right, and the bulls hope to hold this level here at 109 to 112. Let's go ahead and take a look at Ethereum. And, the scenario that I spoke of played out pretty much to a T. And then I needed to see closes above the prior highs. We might see a run towards, 5K, possibly 5,500 if things really got rolling. We saw a swipe up towards 5K at 49.55 here. No closes above. And, I had mentioned anywhere below the the upper first here on the daily. And we'd have to be entertaining a trip back to test somewhere where I was estimating the basis band would be. It's right around 4,400. We have now seen that, but we also see that Ethereum is below it. So I would start to entertain a trip back down to anywhere between this order block at 42.25 to the lower first at around 41.50. Anywhere below there, look for 4K to 39.30 where the lower second's starting to come in. If we do see that area break down, that's where things would get interesting to the downside. Yes, there is some areas right in the 3,900 level, right around the lower second, but it's more on closes below that I'd start looking towards the 37.50 to 36.35 area where the lower third is. Things would look much better, and ETH is in a much stronger position right now as it stands. Things would look better if you start to see closes back above 4,400, especially on closes for the daily. Anywhere between the 4,400 and 4,600 does give, the bulls the opportunity to come and test this upper first right around the 46.30. And of course, any closes above there puts them right back in the all-time high zone. So a much more bullish setup. But what I will say is that bearish divergence played out. So momentum's turned against. And realistically, as I mentioned on Friday, bulls need to hold this $4,062 level to keep structure intact for the uptrend. And if it does drop, then start entertaining a run to 4,000, 39.30, somewhere around 3,900 by the lower second. Anywhere below there, we're going to see expansion down. So, but what I did want to see was some consolidation because we had a nice big compression here to expansion, a retest, somewhere around the bullish half of the bands to the lower first. It's safe for the bulls here, and that's around 41.50 or so. And, that would start to look like a consolidation or compression of price action. And then if the bulls can start getting back above 4,400 to 4,600, essentially, especially 46.30 by the upper first here, then they can start looking right back to the upper second, which would be a run back to the high somewhere around the 4,800 to 5K level. And, I would still be looking for a little bit of a cool down phase. Could it throw spikes up there to the upside? Sure. Just like it can throw spikes to the downside. But watch Bitcoin closely. You want Bitcoin and Ethereum kind of moving in tandem. Bitcoin looks much weaker than Ethereum right now. So, Bitcoin could pull Ethereum down from here if it continues to plumb the downside for more liquidity. And that's kind of where we stand right now. I mean, momentum divergences and bearish divergences on RSI, along with going into a compression. Nothing concerning right now. I'd want to see a consolidation and compression for the real move to get rolling in terms of trending move, because we had a really nice trending move already off this 786 down here for the 375 down here, or 3375. Jeez. And that's kind of all I got for you today. And keep a close eye on some of the economic data that comes out, because that's going to kind of inform whether the market's going to stick to kind of pricing in a cut. And if the economic data isn't lining up for a cut, like if inflation comes in a little bit hot, we've got we've got some things coming in. Let's see. What do we have on Tuesday? We have quite a few things, I believe. Yeah, so we have durable goods. We have consumer confidence and manufacturing index. So you want to see some positive numbers there. And then Thursday, we have GDP. So I do think that based on some of the numbers that I've seen, I think we're going to hit the growth number. But we're also getting unemployment claims. Now, unemployment claims were a little iffy last week, but nothing crazy within the margin of error. So nothing too crazy. Just be aware. It's another big week. It's the end of the month. So there is liquidity rotations going on. And it's all kind of prep for next month. And that's where, the rubber hits the road, I think. And we'll find out a whole lot next month. But yeah, right now, nothing too crazy. Going back, retesting the bigger weekly here, and we'll see if Bitcoin can hold up. And I'll talk to you again on Wednesday, and we'll see where we're at. And I hope that you had a great weekend. I hope you have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe, and of course, as always, stay safe. With all of that being said, Landy out. Take care. Talk to you Wednesday.